Get straight to the flashes on your screens right now. And May trade deficit at $6.27 billion, and May exports is down 0.8% at $22.17 billion. That is coming in on a YOY basis. But remember, exports on a month-on-month basis has slightly improved. May imports again dip at $28.44 billion, and that is a slight it is definitely an increase coming in on a month-on-month basis vis-a-vis the April month. So those are the two important figures. Trade deficit at $6.27 billion, and that deficit was coming in at $4.84 billion in the month of April. It's easier and it's more comparable when it's on a month-on-month basis and gives a clearer picture. Oil imports, that's down 30.45%, and exports looking at $22.17 billion. Of course, it's a slight uptick coming in on a month-on-month basis, so that we'll have to see the internals on what basis has the exports as well as imports have seen a slight uptick coming in on a month-on-month basis. But trade deficit at $6.27 billion. We'll, of course, take it to some of the experts and the economists on whether or not these numbers really give out a good picture of the economy and the trade that has really panned out in the month of May. So at the moment, all right, let's take it across to one of the economists and experts joining us on the phone line. Rupa Rege is right here. Hi, ma'am. Good to have you on the show. Your first reactions on the trade deficit numbers that are flashing on our screen, $6.27 billion in the month of May. On a month-on-month basis, both exports and imports have slightly increased, but obviously on a YOY basis, it is a substantial dip. Your first reactions?
Like slight improvement here and there doesn't change the trend. Yes. The fact is that as long as global economy remains fragile, we are not going to get any significant recovery in our exports. And the fact that imports of means
all right, we have a bad line there. While we fix that one, let's try and get some of the other economists also joining in on the show. But let me take you through the numbers. First of all, $28.44 billion when it comes to May imports, and at $28.44 billion on a month-on-month basis, it is definitely an uptick that we are seeing. On a month-on-month basis, the exports have also improved. Let's take a look at the internals, which would be flashing on your screens and which would be there as well. All right, Shubhada Rao is right here with us on the phone line as well. Hi, Ms. Rao. Good to have you on the show. Nisha Poddar here. What are your first reactions on the numbers that we have seen? And imports and exports are looking better than the last month. Is that really looking like a good glimmer of hope for the economy?
Well, I think I, of course, need to be filled in with the numbers because I'm traveling at the moment.
All right, $6.27 billion when it comes to the trade data. Oil and imports, May imports stand at $28.44 billion versus $25.41 billion on a month-on-month basis. The exports have also improved on a MOM basis to $22.17 billion versus $20.57 billion. So those are the numbers that we have at the moment. Of course, some of the internals are also trickling in, but I don't have all of them. But as far as these numbers are concerned, how what is the kind of picture that you see at this point? Because it's definitely on a month-on-month basis, quite a bit of improvement. When it comes to the trade deficit, then this month has the deficit has clearly expanded.
Sure, I think very much in line. Thanks, Nisha, for filling me in with these numbers. As far as trade deficit is concerned, I think we were at 6.2, so quite close to what we were estimating. We had anticipated imports to pick up by at least, as compared to the previous month, by almost $1 billion or $2 billion. One would be clearly the price impact, because in the month of May, we have seen commodity prices have inched up right since April. So some of that price impact of the global commodity prices having moved up would have shown in dollar terms in our import bill as well. Exports too, we had actually seen them going back towards closer to trend, because let's not forget the month of April, we had actually seen a very subpar as compared to the trend export numbers that we had, somewhere averaging around 22 to 23 billion. So we had actually, expected and assumed that exports would to some extent go back to its trend of 22, 23 as compared to the April aberration of under 21 billion exports. So as far as these numbers are concerned, quite in line with what we had anticipated. Need to know the internals, because clearly within imports, oil would have moved up. Oil would have moved up as compared to the previous month, clearly showing the price impact. We had also anticipated gold imports to marginally do better than what we had seen in April, once again reflecting, the gold prices having moved up. In the month of April, we had seen an import of about 25 to 30 tons, and which in May was expected to go up by about 35 tons. So very clearly, exports, overall, if I look at the picture, we are looking at imports going slightly edging up, and exports somewhere close to, going back to the trend of 22 to 23 billion a month. Having said, trade deficit very much in line with our own expectations. So overall, not a negative surprise, in line with what we anticipate.
Oh, yes, Ms. Rao, of course, the imports have increased much more than the exports have increased and improved. But let me take you through more numbers that have come in. The oil imports have only slightly increased. So like you were saying, of course, we know that oil prices have improved over the last couple of months, and that could have been an impact. But it's only slightly, $5.94 billion versus $5.66 billion on a month-on-month basis. So it's clearly not coming in from the oil imports as much as non-oil imports, which have also increased quite a bit, more than at least oil imports, coming in at $22.5 billion versus $19.76 billion on a month-on-month basis. So I don't have the figures of gold. So you think that it would be primarily gold which is impacting the non-oil imports and the overall imports going up?
That's a problem. That one point, in our estimate, the gold imports were moving up by about $400 to $500 million as per our own assumption. So probably gold has inched up higher. As you said, oil has only marginally moved up. So clearly, we need to assess, the lagged impact of only a gradual pickup in the oil prices since the month of March and April. But having said, I think broad contours remain in line with expectations. Gold is unlikely to see a very significant move up in terms of tonnage demand. So all eyes, therefore, on how the commodity prices behave over the next few months, both be it oil or non-oil commodities, because that's where we will see import will move up.
Right. So that's exactly what we have to keep an eye on. But definitely trade deficit has expanded for the month of May. Thanks so much, Shubhada Rao, for joining us with that expert take. And I'm afraid it's time to wrap this edition of Market Report. But more news and views coming up next.